Eric Sprott, Rick Rule, and Keith Newmeyer are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects. Management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at FutureMoneyTrends/InvestRight. Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with a very special guest. He gets a lot of media invites. He's asked to speak to college universities around the country. He was just a keynote speaker at a uranium conference in France. And my guest today is a New York Times best-selling author. He is known as one of the most disciplined stock pickers in the world. And that comes from an investing legend in the natural resource space, Doug Casey. Our guest is Marin Katusa of Katusa Research, where right now you can actually go to katusaresearch.com and get all the amazing information that hedge fund managers and legendary investors seek the information from Marin, and it's right there on his website. He is truly leveling the playing field for people who want to have an honest, unbiased opinion on what they should look at in a very risky sector. Marin, thank you so much for joining us.
Oh, it's a pleasure, Dan.
Well, hey, Marin, I know you're a busy guy, and you talk to a lot of people. You do a lot of traveling. You've been to more countries than I even knew existed. And just before this call, you said you're about to go to 7 countries in 10 days. So I first want to start off with just by asking you the Fed decision. You know, this is market noise, but this is this a significant event that, you know, here they've been saying we're in recovery for 6 years and they can't even raise the rates a quarter of a point.
Well, it's interesting that you mentioned that. On my website, I'm having a lot of fun writing my own thoughts and doing it for free, because when you run your own firm, you can do whatever you want. So it's interesting how I wrote 3 months ago why, if you use game theory, like my background's mathematics, I did my minor in philosophy. I said that the best game plan for Janet Yellen and the Fed was not to do anything. And I explained on my website 3 months ago why that would happen. And you basically, you know, I tried to explain it. Remember when we were kids 25, 30 years ago, we would read those books, Choose Your Own Adventure?
Yeah.
That's basically the logic. I tried to write it in a fun way. That's essentially where Janet Yellen was at. I talk about the history of the Fed and understanding what they need to do. So that was something that I really wanted people to understand. And, you know, and that I published on May 6, 2015. I call it Pushing Out the Risk Curve. And it's played out the way I thought it would. And how I positioned myself on May 6th, I said, this is what you want to do to position yourself to benefit from it.
Okay, so they haven't raised interest rates, since I think 2005 or 2006 was the last time they actually raised rates. So essentially, central planners today, anybody who's a central planner of significance, they haven't even raised rates in their history, in their career. Do you think a Fed rate increase will come, or do you think it's simply the inflationary forces of the Fed versus the natural forces of deflation for the next 5-10 years here?
Look, Dan, you were at the conference a few years ago when I essentially got heckled and booed at my own conference when I was with the Casey crew, where I said we are in look at all these deflationary forces. You've nailed it on the head. And the reality here is that we are an interconnected world. What happens in China affects us here and vice versa. So the reality here is that the Fed could have what they want in an ideal world, but they have so many factors to come in, the emerging markets, China. And the reality here is that we are in a deflationary environment. And it's not just me saying it. You got some of the smartest guys, Ray Dalio, all these guys that I pay attention to are saying the same thing. So what does this all mean? You know, one Fed, if you look at the actual transcripts, much better to actually read the transcripts because it's a lot faster than to like actually list the press conferences, just rip through the transcripts. One of the 9 who voted against the raise actually said that by the end of 2016 we'll have a negative rate, a negative US Fed rate. That was something really interesting that's never happened before. Nobody's talking about that. It was a 9-1 vote. The one, hawkish, he's doing it more for his reputation. But when you got 9-1, do you think they're going to raise it in the next meeting? Hell no. 9-1, Dan. So basically 9 of the people are saying, we're not going to raise rates here. So they can't just do a 180, and the world's not going to solve itself in the next 2 months. So what does this mean? They're going to have more financial heroin in the markets, and just like any drug addiction, you need more drugs for less of a high, and that's what we're going to have to get into in these markets. So the big question, and I encourage everybody to read my China bubble theory, and I break down the China markets, is what is China going to do? And that's really important question. Remember, 1/3, I have a whole chapter of this in my book, 1/3 of all of the treasury notes are owned by China. You know that they've sold 12% of their holdings? The Chinese are not stupid. How come no one's talking about this, Dan? That's why I love doing your media platform, because you're not looking for what the mainstream's saying. You're looking for what the guys managing money are thinking. And that's what I'm thinking, going, holy crap. If somebody blew out 15% of a position and they own 1/3 of the stock, you want to pay attention, right?
Right.
So why is it any different when the Chinese who own 1/3, maybe just slightly under 1/3, but just for numbers' sake, let's say 1/3, and they've sold a little over 12% of their US dollars, and it didn't even make a headline in the Wall Street Journal. It's not in Forbes. It's not in NBC. It wasn't even mentioned in the debate in the GOP. So, they're talking Iran and they're talking, all these words. There's some serious changes going on, and the Chinese are going to continue to ease their currency. They have to. We are in a currency war, and it's a deflationary pressures. And this is a market. Remember, Dan, the key when you study deflation, first of all, anyone investing, anyone old enough to invest, even Warren Buffett and Charlie Munger, nobody's ever experienced a true deflation who's actually investing today. So all we have to go off by is history. Okay, and remember, history is written in ways that you got to be very careful on your perception and interpretation of history. So the mathematics of a deflation is everybody loses. But the key is he who has cash loses the least. And is gold cash? Well, if you believe gold is cash, which for the last, over 5,000 years, gold has been cash. It's been the most stable form of cash. You want to start thinking about how to position yourself in gold. When you look at guys like Druckenmiller, Dalio, these guys are all exposing themselves to gold in different ways. So gold is going to have its time here, but remember, at the early stages in a deflationary, everything goes down, but the smart guys are positioning themselves for this.
Okay, now you're an expert in the natural resource sector, and that is where you have had tremendous, spectacular success, attracting partners like the Rick Rules of the world, the Doug Caseys, the Ross Beatties, the Lucas Lundins. So when you look at that overall economic thesis you just kind of laid out here, where we're in a currency war, there's deflationary forces, but now you've got a cyclical resource sector, which is at a kind of, and correct me if I'm wrong, an extremely cyclical low. When you look at the TSX chart for 15, 20 years, you look at the other cycles we've been in, this seems to be a pretty brutal bear market that we've already gone through. So, just looking at that, you would say, or at least I would say, this is an opportunity. And now it's certainly, it seems like it would be a safer time to get in to resource stocks right now. However, let's also consider what you just said in the previous answer, that there's also a deflationary force. So is the resource market okay to get into now, or is it still something we kind of need to be very picky and cautious about?
Dan, 100%. You have to be super picky, super cautious, and you have to pick your areas and sectors. And even within the sector, you got to be super careful. So, for example, in 2011, I went on national television in my newsletter. Anyone willing to talk? I said, stay the hell away from coal, both thermal and met coal. I go, the game has changed. If you understand the math, shale gas is in North America. Thermal coal is going to have a hard time to compete to the cleaner, cheaper, green gas, natural gas. And I said met coal is going to have a tough time. I got mocked on TV. As you know, I got sick in 2012, took a couple months off, came back. My first big media outlet was talking about Teck Resources on BNN. When the stock was $55, I said on national television that this was a $25 stock and I would not touch it. And I think it's going to go below $25. That was at the end of 2011. When I came back on it after my heart surgery in 2012, they said, holy crap, Marin, you're right. It's $25 now. What do you see happening next? They go, now is the time to buy. And this is the problem with the markets. Everyone thinks in boom bust. That's not the way the markets really work. You have a lateral portion that I call the echo. So on TV in 2012, I said, no, it's going to go sideways down for the next few years, and it's going to go a lot lower. That company today is $8. Now, why does that company matter? Teck Resources is Canada's largest diversified miner. It's the biggest mining company in Canada. It's the New York Yankees of the Canadian mining sector. 2 days ago, its debt got classified as junk. So wow. If the largest mining company in the sector got classified as junk, what does that tell you about the rest of all of the sector? Okay. That said, yes, I completely agree with you that when everything got thrown out of the kitchen, including the baby in the kitchen, everything, there's always going to be gems, and you stick with the right management team, people. I know I sound redundant, but look, even in every bear market, in every major correction, if you position yourself right, the right assets get overvalued and they also get undervalued. But there's also that lateral portion. So you got the vertical price going up and down, but you also got to factor out the timing, the permitting, the capex, the burn rate, all of these factors that go sideways. And I think what I'm positioning my fund, and remember, I've stayed over half cash in US dollars. For the last 3-4 years, I've had a lot of people going, you crazy, US dollars. But if you talk to the guys like Doug Casey that I talk to daily to, they're like, wow, Marin, we thought you were really wrong a few years ago talking about the US dollar, the place to be. And I think it's going to continue because what do you want to own? The euro, the kuna, the yuan, which is going to get devalued here. So the yen, which has been completely blasted out. So the US dollar wins by default, but gold is also a currency, if you believe that. There's a lot of people that call it a barbaric relic. That's fine. I really focus on what is the true value, not relative value. Relative value is that everybody's down, therefore I'm down, but look how much I'm down versus others. That's meaningless to me. I look for intrinsic true value. And this market is what I've been waiting for. I'm quite active, and the beauty is now you're looking at incredible deals that if you position yourself, but take a longer time frame. Dan, I have not changed my story for the last couple of years. This is what I've been saying to you. Position yourself with the right teams who can survive, consolidate. When I say consolidate, some may hear predator, grab companies with good assets that blew up their financial structure or weren't able to raise the money and survive. There's always things that go on. And in 3 years maybe, or 2 years, or 5 years, I don't have the answer when, but there's going to be some serious big wins here.
Last we spoke, we discussed a company that had just launched, First Mining Finance. It's a Keith Neumeyer company. I know that you, Rick Rule, Doug Casey, Frank Curzio, Eric Sprott, a lot of people are involved in this company, either through recommending it or large share ownership. If you could just give us an update on how the first 6 months have gone on for this venture for you guys.
Look, I've known Keith Neumeyer for a long time. I met him when he just started First Majestic Silver. So he came off the win of First Quantum. I got to know his brother Tony, his older brother Tony, really well. This is going back in like '05. I was the first guy to write up First Majestic Silver when it was under $1. That stock went to over $30, okay, in 2011. But again, you know, when you look at it going, oh my God, $1 to $30. But this thing went sideways for many, many, many years. It took 6 years for it to go from $1 to $30. Different market, different time frame. But, you know, Keith and I had some pretty tough negotiations. I bought just under 10% of his company. I wanted to take 20%, but I wanted those big warrants. And Keith was strong enough that he didn't need the terms that I wanted to take a big position in the company. And he was able to raise the money himself. He wrote a big check himself. The guy is a winner. And he went out and did everything that he said he would do. You know, he just consolidated 2 new companies. He's done now 3 takeovers, and he's grown his base, gold resource base, by over 600%. And obviously you dilute yourself. And ironically, I got a call from him, maybe it was 2 weeks ago in the deal, and I go, you know, I don't get it. What am I not getting here, Keith? This ARB opportunity between GCU, Gold Canyon, which he just bought out, which is a very good project. It has its issues just like every single resource project in the market. But, you know, First Mining Finance is trading around 33, 34, 35 cents in the market, and you can buy Gold Canyon for around 24, 25 cents, and it's a 1-for-1. And while we were talking, I'm like, Keith, what am I not getting here? Like, I've done my due diligence. I don't understand. There's something wrong here. He's like, no, Marin, it's just the markets are off. So you can literally buy First Mining Finance through GCU at a huge 20% discount. And that's what I did. I bought 1 million shares of it for my fund. And I just sat there and I'm on the bid. Because the market is so out of whack, there's emotion. You know, we're entering an area where these shareholders sat there for years in a illiquid story. People are happy to get an exit. Then the algos and the day traders jump in. But, you know, Keith's a winner. I believe in him. He's buying millions of shares of both First Mining Finance and also the Gold Canyon. I talk to him every other day via email or phone calls, and he's committed to it. And I truly believe he's going to build a real mining company that's going to be prepared for the next mining cycle. Stick with the right people.
Yeah, his insider buying is tremendous. I want to say it's into like the since April, it's over 30. Quick question, a follow-up question on the projects they've acquired. One project they've closed on, or they have I think, like, let's say 19 projects total, but the recent projects they acquired and are in transaction with right now, they're all being purchased for less than $10 an ounce of gold on those deposits. If you could give us an idea, and the audience an idea of just, is this extreme? I mean, what do these ounces of gold go for, let's say, in a bull market, an average market, and a previous bear market?
Well, all we have when you do that, that's relative valuation, Dan. So, you know, you're using the past historical markets and you're using relative valuation. But, you know, just to put this in perspective, Gold Canyon was a $3 stock at the peak of the market. You know, so literally Keith, through First Mining Finance, is buying it for less than 10 cents on the dollar. That's smart. Now, you couldn't, for what the price he's buying the company, you could not drill up even a fifth of that resource if you're lucky even to find it. So that's what I like, what someone like Keith is doing or Amir is doing. They're using this market weakness to go and consolidate in a market where it's cheaper to go buy these developed, you know, proven resources than it would be to go develop them yourself, because, you know, these are high risk projects. Like, it's not easy to get out there and find gold, and then gold with 40 millions of drilling. So, you know, he's using the right strategy, but you have to have a long-term strategy for this. With my fund, I believe in Keith, so I'm going long.
Great. Marin, thank you so much for shedding some light on First Mining Finance and all your knowledge about the resource sector and the economy. Your previous book, it's a New York Times bestseller. Wanted to see if we could get a sneak peek into the new book you're working on, and also how in the heck do you have time to write a new book? You're traveling so much, and by the way, congratulations. I know you just had actually your first child, a baby girl.
I did, and unfortunately, I'm away a lot, so I'm trying to, I'm learning about the balance of the personal life to the work life. Up until this my child being born, it was always about work, 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 work. So I'm really trying to balance it, and where I get all my time is being on an airplane. It truly is my only alone time, and I get to write my thoughts out. And the only reason I write, look, there's absolutely no money in writing a book. It's kind of like a labor of love, but for me, it's a labor of therapy. I live in a very high pressure world, very high risk world. I go through 10 meetings a day, 40 phone calls in the morning before the markets start between investment bankers, brokers, ideas. Talk to Doug wherever he is in the world, or Olivier, the guys in my fund, the guys in my office. And writing it's almost like I don't really have much time to play music anymore, but it's replaced my therapy of just trying to put my mind at ease. So I will be writing a new book. The date, I've got a lot of book offers, because once you're on the New York Times, it's kind of a shoo-in for your next book. But, really, I don't know when it will truly be done. But I'm working on it, and I've got a very unique idea. And I think one thing about me, it's going to be original. So it's going to be fun. And, it's funny, Dan, I just got my first copy of my book being published in Japanese. It's now for sale in Japan, and it's pretty cool. It's seeing your book written in a language that you really don't understand, and it's different cover, and they just do their own thing. So it's kind of interesting, and it's kind of fun in a way. So that's why I do it.
I imagine. I know you worked really hard on that book, and for anyone who hasn't purchased it, I believe you can get a link on katusaresearch.com, correct?
Yeah, I think so, or Amazon, or hell, even the library has them. It's funny. I have a cabin out in the U.S. It's about an hour outside of Vancouver in Canada there. And my wife and I were just going for a walk with our baby. And I said, hey, let's check out the library, because there's always books for sale. I've got a huge book collection. It's one of the things I do is collect books. And it was funny. They have a thing in the library for New York Times bestsellers. And it was me and Anthony Robbins for his book, Money.
Yeah,
we were the two featured in the library, so I got a big kick out of that. In this small town library of Point Roberts, they had my book being featured, so it's kind of funny in a way.
That's great. And then before we close out, you have a conference in November. I will be attending that, and I imagine this is going to be the cream of the crop conference, because and the people who the legend in this industry, the top investors, the top CEOs, they all want to work with you. So I'm sure yourself and everyone who attends is going to have high expectations. Can you let us know anything about the new Cambridge conference that's going to be in San Francisco, but it's going to be in partnership with Katusa Research?
Correct. So what happened was Cambridge House runs the largest retail conferences in North America for mining companies. At the peak of the market, they had over 15,000 attendees in the market. And, I've known the owners for a long time, Joe Martin and his son Jay. I've known these guys for a long time. I've always been speaking at them for a decade. And, they were going through a rough patch. I said, look, guys, I got an idea. Now that I've left Casey, I can do whatever I want. And what you guys should focus on is bringing the absolute best in the markets. So what we decided to do was we took over the silver show, and we've got, silver, Pan American silver, silver standard. We've got Gold Corp. We got First Majestic Silver. We got all the producers, Silver Wheaton, Franco Nevada. Ross Beatty's coming in to get inducted into the Resource Hall of Fame. So we have the absolute best speakers in the business, and that's the retail portion of the show. And then upstairs, we have the institutional side, where the biggest money managers in the resource sector are meeting with the presidents of all these companies. And I've got speakers coming in around the world, guys like Grant Williams, who I think is one of the best speakers in the world on big macro stuff. He's a good buddy of mine. I recommend his stuff to everyone. The Real Vision guys, just cool stuff. Original independent thinkers. I also have guys like Frank Holmes, Rick Rule, Ian Telfer, chairman of Gold Corp. Like, it's the who's who of mining is going to be there. I got Brent Cook to give a special talk to the institutional guys and also the retail crowd. Basically, my rule is this, Dan. If I'm not willing to go to the talk, they're not going to be speaking at my conferences. So it's a joint venture between Cambridge, so it's called the Cambridge Katusa Conferences, and we have the San Fran show November 23rd, 24th, downtown San Fran. Go to the Cambridge House Conference for that. It's going to be up on my website soon. And then in Vancouver is going to be the big one. We'll probably have about 8,000 people to that, and that's the big show in town. So it's going to be fun and it's exciting, and we're going to have some very big name speakers there.
Well, Marin Katusa, a man of high standards, and like I said before the show started, this is one of the individuals that no matter who you talk to, especially in the resource sector, as soon as you mention the name Marin Katusa, they're interested in what he has to say, what he's buying, and what he's about to do. Marin, thank you so much for your time, sir. We really appreciate it. You have a great week.
Thanks, buddy. All the best.